Hey, what's up, guys? Sam here, and welcome to the Simpler Trading Weekend Review. We'll go ahead and start here where we usually start, which is the indexes, and then we're going to branch out and hit some credit markets. We'll hit some volatility. We might even take a quick look at some currencies. We'll round back out. We'll look at all the sectors, and then we'll set up a game plan going into next week. So another week is now in the books here on the market, and it was certainly a wild one, with NVIDIA earnings being the wildest. And for the first time in a long time, we actually have some stuff that needs to be covered. So for many weeks now, I've come on these Friday videos and I've just told you everything's great, keep on buying, don't stop buying. But that's because the signals imply that that was what should happen. At this point, the signals have shifted a little bit, so let's cover these. On the weekly chart, the score has dropped from 100 to 70. On the daily chart, the score has actually dropped negative, although still neutral, but dropped negative for the first time in, I can't even remember last time. I guess must have been back here somewhere. Late May, late April, early May. So, well, what do we have now? Well, we have looks to be a close, actually. Let's see. The low of this bar is 66121, and we closed at 59. So we did close below the weekly low on that. So now we have a little bit of technical damage here, right? Now we're starting to get some issues with the overall structure of the chart. One is you're finally closing, and it's just one bar. You know, this can be fixed, but we always work with probabilities, and the probabilities would not imply that it's fixed. The probabilities imply that this is a crack in the ice and that the crack spreads further, right, from a probabilistic point of view. However, one bar break of it, the 10 weekly EMA, not necessarily a great signal quite just yet. The more important signal is that for the last couple of weeks, you've had some pretty bad closes, right? So this was the low of this important bar here, kind of a big range bar, and you are closing below it. So you're closing below structure as well as that white line, which is the weekly 10, which isn't usually great, and then you've knocked this out of kilter. The way this indicator works, though, is it doesn't lock in place until the end of the month. So the bulls have 1 week left, as far as I see. Maybe there might be 1 week and a few days to fix this. So going into next week, I would imagine seasonality is pretty good for Thanksgiving week. It would be unpatriotic if it was not. But they have a rescue mission ahead of them here. So the daily chart, this is the first time in a very long time that we've seen negative momentum. And you started getting sell signals all through here. If not sell signals, and just transition signals or warning signals. And now, as the structure starts to develop, this then starts to become actual sell signals, right? So this looks very naughty and looks a little bit like the opposite of this over here. In fact, I would actually argue that maybe this and this are the same thing. So what do we have? Well, there's a level here that's holding up the whole market. It's right around 653 on the SPY. And I think that if you get below that, then you actually will have kind of this topping structure, and I would be looking to target the rising 200, which I would be a very strong buyer of if it were to get down there, but it's quite a ways away at the moment. So aside from that, just be mindful of the gap here. I've been warning you guys for some time about this, so anyone who's been watching the Friday videos, whether you do it on the Simpler Trading page or whether you do it on the YouTube, hopefully you have traded this better than I did. I recall 2 weeks ago, I was standing in front of a beautiful room of beautiful Simpler Trading people, showing them this very signal, and I said, this signal here tells me that I need to be day trading, not swing trading. And then I happened to find some very beautiful looking swing tradable charts, and that ended up getting me into a negative position that I had to try to trade myself out of, and that I still ended up down on. So Oftentimes, and I say this mostly for the folks on YouTube because the folks in the main room have heard this conversation already, but I say this mostly for the folks on the YouTube, is when you have a pretty strong conviction in your own indicators, you really have to trust it. You really have to trust it. And if you don't trust it, then you have to be very quick to pivot. Otherwise, you'll end up not only losing money, which is not great, but then you end up losing time. Time and money loss combined is really where it gets kind of not great as well. So always spend a little bit more time here on SPY just because it's the big kahuna. Let's go to the Qs next. See what these rascals are doing. And looks very similar. I would say that just the main difference here, see if you can spot the difference. It's on the left hand side towards the bottom. See if you can spot it before I show it to you. Very obvious. This is a difference from SPY relative to the Qs, and that is that the Qs officially now have a little magic arrow up here at the top, which reverses the magic arrow down here at the bottom. So you got a magic arrow here, that took you all the way up, and now it's finally decided to dump you out. That magic arrow is coinciding with the upper arrow to the downside. This isn't the worst signal possible, like this isn't aligned yet. This is just no trend, not bear trend, but it basically puts the kibosh on the party for now. And then you have all the same things here, right? You've definitively shattered that 10. You did come down to the 21. My whole bias was that the 21 is not going to hold, simply because the way I use moving averages is I let the score tell me what to do. And you see here how this is neutral. In order for me to blindly trust the 21 top of the cloud, it would have to be bull, at least neutral up, and this is just neutral. So typically when it's neutral, I then start looking for previous highs and lows. You know, I guess you could argue there's a little intermediate term high there, right around 80. So that's kind of this level that I'm looking at there. If that doesn't happen to hold, then I would actually look for a test of the lower part of the cloud, which lines up with the previous breakout, which lines up with 540 on the QQQ. So we're doing this in the indexes, but then we're going to go back and check our work towards the end of the video. We're going to check our work using the sector work, and then we're going to look at world markets. We'll try to do that pretty quickly, but we always spend a little bit more time here on SPY just because it's such a representative group of what we try to do. So the big day came for the IWM. Now, some may argue too little too late, because the damage here has been already done, and it did have a very big day today, but it also had a very big down day yesterday, so a little good, a little bad. Let's spend just a bit more time on this because this one's got more stuff going on. The scores are much worse, although the indicator likes this more than the Qs at the moment, which is unusual, to say the least. I really don't see a ton of edge here. I have a level here at 44.5. I have a level down here at 27. If I cut my box here, see how if I just box in my levels, if I just kind of eyeball the center, you know, kind of that looks about right. So you see how you're in the lower half of that box there. You're not all the way back to the cloud. You're not at either level. This candle from yesterday is cartoonishly big. So I don't really have any edge here. I certainly don't want to come in and buy the IWM. If the IWM is going to be the leadership from here on out, then God bless it. I will send it all my best wishes. But I'm not seeing anything here that would get me to want to go into the IWM at the moment. The daily chart is the worst one that we've seen. It has red structure, it has purple momentum, so I don't necessarily like any of that. But it did have a big day today. So, and it also has the most constructive weekly candle. So for the folks in the main room, in the simpler trading room, show up to my session on Monday. It'll be at 9:30 Central. I'm going to give you guys my weekend work because right now, this is the most complex market that we've seen, And that's not a bad thing necessarily. It just means that it's more complex than it's been for the last months. Where a blind man can throw a dart and find a winning trade. Now you actually have to get a little bit good. So the best thing that I can do for myself and for you guys is actually to do my weekend work, kind of big picture. I'll write that all up. I'll write the game plan out as well, and then I'll share it with you guys in the room on Monday, because there's a lot of complexity here and I need probably a little bit more time to deep dive this stuff. There is a 2-day and a 3-day squeeze here on the IWM, but I can't tell whether they're any good or not. My bias is that they're not, but I'll round back out with you guys in the main room on Monday. Let's go to HYG. Again, as always, we look at HYG as a measurement for risk appetite. Although, well, we're going to have to check on bonds today. So let's actually do this, because I need to see whether HYG is up, because this is actually very bullish. And we did have a bullish day, but I just want to see what it looks like compared to the 10-year. So let's see if the 10-year is up or down as much as this. We'll look at it with HYG, or with ZN, I should say. Okay, so the 10-year is up about 30 basis points, and HYG was up about the same. That's okay. So then we go back here to HYG. I just wanted to check to see if it was wildly outperforming or not. This looks to be in line with the performance of the bond market today. So I would still read it as a bullish sign, because that's just that's just the way it is. But let's spend a little bit more time here. Kind of a mess. Yeah, so last week I told you guys this chart didn't offer edge to either side. I would tell you the same thing this week. There's a little good and a little bad, and therefore this offers no edge to either side. The main takeaway from this, the little good, is that this is neutral and positive. This is neutral down and negative. So hot water, cold water makes warm, makes room temperature water. So there's no edge here. The main takeaway from this, though, is that for weeks there was edge here to the bulls. I would not say that this has transitioned to the bears at all, quite just yet. Below the daily 200 is where I would say that the bears are now in charge completely, but I don't see that yet. In the intermediate term, like the most direct signal is going to be right here. So if you force me to give you an opinion on this, I would say that the bears are actually slightly in control, just because the daily chart has red structure and red momentum, and bear slingshot here, and you have a weekly squeeze that's building. So that could get a little funky. Let's check the volatility next. The volatility is the main signal that I had been showing you guys. It was a very, very simple signal, but notice how well it's worked. So before we cover that VIX signal that we've covered leading up to this week, before we cover the VIX signal, I'd like for you to drop us a like on the video, drop us a comment, a question. I have been going back with my own account on YouTube and answering the questions, so if you do drop a question in the comment section, I will answer it. If you don't have something to ask, then help us out either way. Drop us a comment on what you're going to be having for dinner, your favorite beverage, or your pet's name. For me, it's pizza, water, and I don't have a pet, but my mom's cat's name is Cold. And also drop us a like, and then we'll go to the VIX signal next. So let's see how this is developing here, because if the signal is true, then we have seen nothing yet. We have seen nothing yet. So we'll see if this is any good or not. But if you recall, the VIX signal was as simple as this. We pull up the squeeze histogram. You can use the Squeeze Pro, you can use the free squeeze, it does not matter. And we were looking back here and we said, okay, when this goes flat, and I told you it was going to go flat right around Halloween, very spooky time for the VIX. I told you it was going to go flat during Halloween. That was about right here. And if it plays out like it did before, we're about 2 weeks away. So that lines up with Fed. We're about 2 weeks away from when it actually triggered last time. So notice how this is all, everyone's happy, no one is crying on social media, no one's freaking out, no one is changing religions in the middle of the trading day. But then once the squeeze histogram starts to go up like this is where you should be on guard for it, right? Now, the cool thing is it seems like the signal is pretty solid. I'll give you the scary story, which you need to be aware of, which is imminent, and then I'll give you the happy story, which comes later. The scary story is that this implies that within the next 2 weeks, something like that will happen. What is it? I don't know. I don't care. It's not my job to know. My job is only to try to assess risk. So that's kind of what's in the cards now. Does that mean that it plays out exactly as last time? No. Could there be some surprise to the downside that wipes all this stuff out? Yes. Is there enough signals for me to say that that is the higher probability? Absolutely not. So I would go with status quo until proven otherwise. So here's the happy side of the scary story. When you see the squeeze histogram round back out, whenever that happens, then that's your opportunity to buy. Keep it simple, right? And the cool thing is, I could look at individual stocks and all this other stuff, but if you kind of get what I'm putting down here on the VIX, this alone is enough to trade pretty much whatever you want to trade. So in the next 2 weeks, I'll even hedge. Let me just hedge, because then I'll get called out if it happens like 2.5 weeks or something. I'll just hedge. I think it's 2 weeks, but I'll tell you a month. Within the next month, look for something that triggers this VIX signal to a level that most people probably aren't expecting. So that's the VIX. Let's check our work. Let's do this over here. If you hadn't seen the VIX signal before, drop us a like. If you had seen the VIX signal before, still drop us a like. So if we look here, this is all the world markets. SPX neutral down. Haven't seen that in a long time. Hughes neutral, gray, gray, gray. This is the Mag 7 index. That's gray. Equal weight Hughes down. That's down. Momentum. You don't see this very often. Momentum is actually bearish. Germany as a representative basket of Europe breaking down. If this has a bad open next week, this looks like a very big precipice to be looking over. I mean, let's just look at this chart for a second. And again, you're going to say, why do I care about Germany? Personally, I don't care about Germany either. I'm just showing you this chart because it's a representation of all of Europe, and Europe is slightly important. So let's use kind of this zone here as the support zone. I think that's a fair assessment. And look at the precipice that is underneath if this thing fails. You see how there's absolutely no structure? It's like an elephant standing on top of a pencil, right? You have like this pencil type of move up, really sharp, and then you have the elephant sitting on top of it at this point. So be very, very mindful here, because everything here is lining up. Like the VIX signal, if that triggers, it goes straight up, and this goes straight down. And the thing about this going straight down is, there might be some support here from this previous structure. There might be something there. There's clearly something here from this structure. So there might be like a little fall there, but then below that, I have absolutely nothing. So when I show you Europe, understand that this is just a precursor to America. It's, it's two sides of the same thing. China, bear, Japan, neutral. So this is as bad as we've seen in a very long time. And here's the thing, and this is not going to make me a popular guy, but the first leg of a bear market, everyone still thinks it's a bull market. Some of the messages I've gotten from friends and colleagues imply that there's a certain level of desperation out there as well. Maybe this is it. Maybe this is it. Maybe this is it. Maybe this is it. You got to be really careful with that stuff. Make sure you have a very strongly defined point of view in terms of what you need to see that meets your trading plan in order for you to change your mind. If you find yourself saying maybe this level holds, or maybe that level holds, or maybe just here, maybe just there, and you don't have a plan, make sure that you clean that up this weekend. You'll have 3 days counting today to clean that up before next week. So make a point to do that. Here's the sector work. Do I want to be in home builders? I mean, no, it's good luck with that. Do I want to be in ARC? No, that's a bear. Do I want to be in XLC? In a world of red, purple looks good, but maybe we could find better. Financial, same thing. Industrial, same thing. Industrials look to be breaking down from that kind of pattern as well. That looks a lot like Germany. XLK is bearish. The staples are trash. Utilities, yeah. Really, the only thing here that looks even remotely serviceable is going to be more healthcare. And it's really funny because 2 weeks ago we were in the live room, we were in the live session, and this came up and it was right here. And I said, the only thing that looks good is healthcare. I never trade healthcare. I said, the only thing that looks good is healthcare. And it just goes straight up and asked me how much of that I caught. 0. So that's the sector. So very underwhelming out there. So let's do this. So I'm going to give you the best looking big thing I can find. And I am not guaranteeing you that this works. It's exactly the same pick that I gave you last week. I told you Tesla and Apple were on my radar. And Tesla had some good days and some not good days. But it doesn't really match up to what Apple here looks like. So in terms of the best big stock that I see that has not yet moved, because the best big stock is probably Google at this point, but Google is on its own planet, whereas Apple does have a squeeze and a max bull. Now here's the thing, and let's make a mental note, and also click the like button. Let's make a mental note that the max bull on Apple is in play, but let's also make a mental note that it's a high compression squeeze. See the magenta dots there? High compression squeezes love to go counter trend to the prevailing trend that got them there. So clearly you have an uptrend here in Apple, very strong, nice uptrend. But I would not be surprised to see this high compression squeeze actually break down. So of course, if the market's decent, I think Apple will perform well. But this is the best big stock pick that I see out there. Max bull with a squeeze. It's a pretty big stock. Be aware of this though, if at any point Apple closes below 260, I think that is a significant problem for the market. You would not want to see that because that's 260 is the previous all-time high. You don't want to trade above it and then break below it, right? So keep a couple levels on your chart. It's going to be 650 SPY. If you want the exact level, it's 653. 653, 650 SPY. And just as a equally important level here on Apple, it's going to be 260 on Apple. So you got to see those two levels stay above. If you get a day where the market closes below SPY 650 and Apple closes below 260, then at that point I would not have a single bullish case to be made going into that event. So real quick, let's just review everything. Sometimes I forget to tell you guys all the good things. Let's make sure we covered everything. We looked at the indexes. We looked at credit market. We looked at VIX. We talked about the VIX signal. The VIX signal is imminent. So let's go back and make sure that we are all on the same page here. It does not mean that it plays out exactly as it did before, but from a probabilistic point of view, you definitely wish to be aware of the signal before it happens. And some people will say, well, it already happened, Sam. I've been absolutely crushed. I was in Bitcoin. I was in quantum stocks, whatever it was. But if this plays out similar to last time, then there's a potential for something like that, and it's lining up to happen right around Fed. So we'll see how it all plays out. I continue to think that this is a day trader's market. The volatility intraday is just so massive that if I'm sitting in swing trades like I have been, right, I did not trade this perfectly. I told you the perfect advice. I told you the perfect setups, but I did not trade this perfectly, right? So I want to put that out there very clearly and very directly. So even if you lost money this week and you were bullish, I lost money last week and I was not even bullish. So there's always ways to improve, and for those of you in the simpler trading room, I've covered that extensively with you this week. I'm going to get off my soapbox next week. Next week we go right back to just hardcore trading. I've soapboxed you guys enough, but I want to soapbox you guys on the YouTube just a little bit. So this week, for those of you on the YouTube, if you had a good week or if you had a bad week, I want you to spend some time, at least 30 minutes, writing it down on a physical piece of paper, what happened, journaling, ways that you're going to improve, and setting attainable goals. Okay, and this is specifically for the folks on the YouTube. So again, be mindful here of the VIX signal. I'm not seeing anything that's going to change my mind in terms of day trading with a bearish bias for myself at the moment. I did go bearish, slightly bearish into the weekend. Nothing that's going to hurt too much. Asymmetric risk. But in reality, I want to be as flat as possible every single day. I want to be able to play this market bi-directionally. And then if the market does have a weekly close at some point below SPY 650, then I will commit full bear at that point. But for now, let's view this market as traders, as an opportunity, not a liability, right? When you get 100-point moves up and down in the same day, this is the kind of stuff that we should be dreaming of. But we can only dream of it if we're positioned to take advantage of it. And if I'm coming into the day massively long or massively short, and the day's swinging around 100 points at a clip, I'm not positioned for that. So I'm going to make sure that next week I am positioned correctly for that, meaning that I'm flat and nimble. And then once I see a little bit something set up on a longer term time frame that looks more like trend, then I'll commit to that, and we'll cover that in next Friday's video. All right, guys, that's my time. Thanks as always. Cheers.